water break, you will allow me. Yeah. It's a brand that hasn't paid me to advertise them, so yeah, I cannot display the name. All right. As we wait for guys to tune in, I'm gonna read out his trading bio. Abraham Koome is a trader, an aspiring quantitative portfolio manager. Overview. Abraham Koome is a market-focused trader with experience across foreign exchange and equity markets, combining discretionary insight with an increasingly quantitative, data-driven approach. He began trading in 2022 at the age of 17. So that would make him, just a minute, guys.
I'm good. I hope you can hear me.
I can hear you loud and clear. Sorry about starting a bit late. I got traffic on my way home.
Oh,
And
yeah.
yeah, so that's why we're starting a bit late. Allow me to read out the trading bio
So,
first. You caught me trying to do your trading bio. I
uh,
think what we can do, we can have a pre-recorded version if guys are having trouble
okay.
looking in. Yeah. So Abraham Koome is a trader, aspiring quantitative portfolio manager. He's a market-focused trader with experience across foreign exchange and equity markets, combining discretionary insights with an increasingly quantitative, data-driven approach. He began trading in 2022 at the age of 17, motivated by a strong interest in understanding financial markets, capital flows, and the mechanics of price discovery. His work emphasizes disciplined risk management, probabilistic thinking, and continuous strategy refinement. I'm going to read out the portfolio management. He currently manages a
Okay.
portfolio exceeding 100 Kenya shillings million on behalf of a high net worth individual. His responsibilities include portfolio construction, risk monitoring, disciplined execution, and ongoing performance review within a defined risk parameter. Then his professional objective, he seeks to deepen his exposure to institutional trading environments and expand his quantitative expertise within Africa's rapidly developing capital markets and the broader global financial ecosystem with long-term goal of becoming a quantitative portfolio manager. That's quite an impressive bio. Thank you so much, Koome, for joining us. Maybe
Yeah.
we can tell guys the theme for today will be debunking stocks. We will learn and relearn everything we've heard about the stocks market. Maybe you can start off by telling us your journey into trading and how you bumped into the stock market.
So my name is Abraham Koome. I'm actually 22 years. I'm turning 22 years this year. My journey in terms of seeing through a couple of markets, that is, in terms of how I started, came to realization after I saw the opportunity that it exists in terms of foreign exchange. So that's where I started. I started with Forex, and then throughout my journey, through engaging with a couple of people who are higher than me, who are much more experienced than me, I came to understand that there's a bigger game, or let's say there's a bigger market. And in terms of that market, it was much more focused on growth rather than uh, fast fast results, or let's say fast profits. As much as we see Forex has a high liquidity, and it's much entailed with getting profits in short-term goals rather than long-term. Because when you count the number of people who are trading Forex in terms of short-term, there are many more than the ones who are like swing trading and doing much more of like 3 years or 4 years return. So I also saw an opportunity in terms of me being able to advance myself, because as you can tell, in forex there's a trap that gets you so much committed with it that you don't realize time is passing, because it's 5 to 6 years, because that's the mark for a lot of people in forex, for them to actually understand that forex is a long game. It's something that you have to really give out yourself out in the utmost effort. You have to really dig yourself, because a lot of times you find forex really shows you who you are as a person, because you're handling money and you're handling a lot of risk, and then at the same time you have a lot of pressure, because when you see the amount of liquidity, or how the market moves in terms of New York section, because that's the most the one which is much more volatile. You have to make decision at a certain time, and you have to make it right. And if you're wrong, you have to face the consequences of that. So when I met stocks, I was taken aback, because stocks requires you to handle a lot of information, but you're not rushed to make a decision. So it's much more of, you get to understand what happens in the economy, because stocks is just a representation of your country's economy, because stocks is just a part of like companies, Safaricom, KCB, Equity. These are industries that make our economy in terms of our country, Kenya, USA, whatever country you mention. If you find a country doesn't have a stock, you'll find them, they are confined to only the old, let's say the old way of working out the economy, because stocks is really a game changer. It's something that you get to find that companies also are able to raise money from that. So that's how I found myself in stocks. And also I saw the opportunity of actually getting to a bigger portfolio, being able to manage a lot of money, because with the risk that is involved in forex, you can get yourself to the top, but it's very easy for you to go down. So how do you manage that risk? You get into such markets like stocks.
All right. Well understood, well explained. Maybe for people who are in Kenya, because that's where we're based, you can touch a little bit on local stocks. What is the process for investing in stocks? Should people do buy and hold investing? Can people speculate on stocks? And then what is the time horizon for, I know you have like annual dividends, right? Um,
Yeah.
do people need, I know there's the Nairobi Securities Exchange, former Nairobi Stocks Exchange, has like a
Yeah.
portfolio or a bunch of stocks, local stocks. Maybe tell us the process. Does one need like a trading account? How does one go about that?
Thank you for that question. So the process is actually it was a little bit complex before, but right now, thanks to the Nairobi Stock Exchange, that's to partners like Safaricom, they've made it much easier. So the first process you start is by identifying a broker, because you need someone to connect you to the market. You don't have enough liquidity to go by yourself. So when you find a good broker, there's a lot of brokers right now. There's Sterling Capital, there's AIB, there's also banks which can offer you an account, but then your local bank can offer you a we call it CDS account. So you have to get registered first, and then you get a CDS account. You need to be 18 years and above. Also, it's free of charge. You're not required to pay any amount. So whoever tells you you need to pay amount, that's a scammer. So you need to first of all be registered, and then you have an account. After you have an account, that account should be now connected to your broker. So the broker will be receiving funds and everything. So that's where you're doing it. And then for you to now get into the market, there's a couple of platforms you can use. That is in terms of analyzing the stocks, seeing how they are doing daily, because the stock market is open from Monday to Friday. So you have to have a place where you are actually seeing how they appreciating, because they're not as much liquid as the other markets. They don't move that fast in terms of Kenya. Let me say Kenya because that's where specifically I've seen also a number of African stock exchange like Nigerian exchange is not really moving that fast, but it has been very liquid the past year. There's also Egyptian exchange, which has been very stable in the last 10 years. Johannesburg Stock Exchange, a very good one for you to invest. So there's a lot of processes involved, but for Kenya, it's much easier right now because also in your app, I think M-Pesa app, they have included a tag where you can also like invest in the stocks. But I'll prefer for you to get a CDS account because that's much more of like you have the ownership and you can also like be able to see what you have been doing and everything because there's a record that is always kept. So that's how you're able to trade in the stocks.
Okay. Let's also touch a little bit on the stock indices, or what we call like a bunch of
Uh-huh.
stocks classified under a group of
Yeah.
one index. Um, so for example, the Dow Jones Industrial Average or the New York Stock Exchange or even NASDAQ, which is a technology-based bunch of stocks. If someone wants to actually invest in offshore stocks, and this is where I plug in the sponsor broker for this particular webinar, Do Prime Africa. So if you open a trading account with Do Prime Africa, you have access to offshore stocks. And you also have access to stock indices that have a global footprint, right? And you can buy a fractional share of Microsoft, for instance, Nvidia, Google, Tesla, and the like. So when it comes to these indices, what can you tell people about the different classification of the bunch of stocks, and how does one now take that and become a speculator? Because there's two elements to stocks, I believe. There's a buy and hold investor who's gonna buy a stock today and hope that it's gonna appreciate and then hope to sell it at a margin or at a profit. And then there's a stocks speculator, more so like a forex speculator, who's looking to ride the momentum and
Yeah.
the volatility of the stocks to be able to generate an income either on an intraday swing and whatnot. So what is the difference between the two?
So when you're talking about stocks alone, stocks you're only getting one company or you're only investing into one place. Let's call it on that. But when you're talking about stock index, I think we basket of companies. Let's say, for example, there's an index that has been created for tech companies. You know, this in Kenya right now. I think there's a lot of booming tech companies, and they are grouped as one, and then you're able now to put your funds into that. So when something happens in terms of innovation in tech, there's a new product that they have made, a new software, and it's actually going to help people, and it's going to like solve a problem because money is able to be generated where problems are solved, and you get to see that through the companies that are always formed, or even we are lucky enough to be in the time where there's a lot of new companies being formed, and when you get to study them, there's a particular problem that they are solving, and with that process of being able to solve that problem, they are able to generate income. So when a stock index is formed, it's chosen from specifically, let's say, a certain industry. We can go for in a stock index in the tech industry, or in the finance, or what we call bank industry. unapata, let me also speak in Swahili so that other people can understand. You get that Equity, KCB, Absa Bank, Cooperative are taken as one index because what you are investing into is the banks, but now you are able to invest into one or to more than two, but you're only investing with one capital. You're not diversifying. That is, you're only investing into that basket. So that's what a stock index means.
Okay.
In terms of how do you invest into them, is it depends with your risk appetite, and also, let's say, also yourself, your personality, because for me, I love taking risks, but for somebody else, probably they don't love that. So stock index is much more safer, I'll call it on that. But if you're targeting for margins of 20% to 40%, 50% return in a year, stocks are much better. That is.
All right. So with stocks, you have a long-term perspective to investing, vis-a-vis
Yeah,
other asset
that's the
classes.
best.
Okay. Okay then. So who would you tell, like, who would be your ideal candidate for a stocks trader and or investor, in your opinion?
My ideal candidate will be, that's an interesting question actually. But my ideal candidate will be somebody who is earning, who has a stable income or a business which is stable, because you'll need to fund it continuously. It's not something you just put money once. If you're putting money once, it has to be a huge sum so that you can be able to actually get returns that are making sense.
Mhm. All right.
Yeah.
And one of my favorite stocks market teacher, his name is Jeremy Newsom. You can find previous webinars we've had with him on our YouTube channel, at Silver's
Mm.
Traders Lounge. He says that when it comes to stocks, you'd rather be an owner rather than a consumer.
Yeah.
Like most of us
True.
here know about Netflix. So how
Huh.
you pay like $30 a month subscription
Yeah.
for
Yeah.
Netflix, right? If you
Yeah.
invested 100 and okay, so what is $30 times 12? That's about 36, 360, right?
600.
If
Yeah.
you invested $360 every year on Netflix stock, you would actually
Yeah.
be a very big, sort of like a millionaire by the time you retire. So
That's true.
it goes to the point of Americans are very big consumers, and their economy is driven by consumerism. And it
Yeah.
that kind of like trickles down in other economies as well. So that point of ownership, can you like tell us more about that? Because I believe like most young people here can afford 30, $50 on a monthly basis. Some can even afford more if you
Yeah.
have like a stable job, like going back to your point on the ideal
Yeah.
candidate. So I believe that capital should not be like a limiting factor to become a stocks trader. What is
True.
your thought on that?
So my thought is actually really interesting, because you find that people are very different in terms of how they approach money. Is something that they have to be reprogrammed again. In terms of stocks, is you're parting away with money, like literally you're parting away with money, and you're making an investment with the projections of a return, let's say a good return, or you're hoping to have it fixed for, like, let's say 10 to 20 years, so that you can earn dividends, because there's a lot of companies which are really stable. Their stocks is not really volatile, or even in terms of how they move in a upward trajectory. So you're always in a projection of a bull run in terms of that company. For example, let's call it on Safaricom. Let's go. I love taking references from something that people can relate to. Safaricom has a monopoly in Kenya. Let me call it on that. This is a totally annihilation in terms of telecommunication, in terms of also finance, mobile finance, that is. And also another thing I've seen also in terms of internet, because Safaricom is trying to innovate a lot of tech that will be able to bridge a certain gap in terms of how people are able to get connected to the internet, how people are also able to get money across places. And Safaricom will always make money. That's the thing. So how do you get a piece or a slice, let's call it even a slice of cake of the bigger one? So you have to now invest into it so that you can actually get returns. So when somebody else uses Safaricom, when you also use Safaricom, at the end of the day or at the end of the year, your money just didn't go to waste. You also took part in making money for Safaricom, and now it will trickle down to you, because Safaricom paid last year. It paid dividends, and a lot of people got dividends. I also got dividends from Safaricom, and it wasn't that much of a bigger dividends, but it was something that showed us that Safaricom is on a good track. It gave us confidence as investors that we are really going in an upward trajectory in terms of the company growth, and also I myself, my capital is safe when I invest in Safaricom. So that's one picture you can get. When you're doing that investment, you have to understand the risks involved also, and also the other side of it.
All right, well understood. Now, as we conclude, so that we can take the Q&A session from our attendees, I can see Roy and Alice. Thank you so much, guys, for tuning in. Maybe besides from the reminiscences of the stocks market operator, trader
Yeah.
by Jesse Livermore, which other trading book would you recommend on stocks that you have read cover to cover? And is it like available on Amazon, or where can people find such info?
Uh, and to people, I love reading letters by Warren Buffett. Actually, like, I don't have a specific book that I can tell people to read, but I can tell you, if you're deep, that is, if you're deep into stocks, read the letters of of Warren Buffett, from when he used to write in 19, I think it was 1990, 1980s, to right now, because there's almost 100 letters. So you have a long way to go. But if you are starting up, I'll tell you to go and read The Intelligent Investor by Benjamin Graham, and also one app on Wall Street by Peter Lynch. That's the one that I'll actually recommend people to read.
All right. Now let's move on to fundamentals a little bit. You've seen what has been happening to Venezuela and the assassination of the president by Trump. Um, I do know that,
Yeah.
like, whatever affects, because it's an oil producing country, and whatever affects oil eventually trickles down to other markets. How has that impacted the stocks
Yeah.
market, especially the global stocks market?
So in terms of what we have seen with Trump invading Venezuela and actually capturing the president, what has really spiked what has really spiked in terms of the stock markets is companies involved or around the industry of oil. So we can call it from the companies that are doing the oil rigging or rigging, the companies that are doing the transportation, the companies that are doing the refining of that oil. Their stocks are actually going really up, and I've actually highlighted a couple of them that I'm actually going to look into over the week. So with that kind of fundamental or news happening, you find that investors see an opportunity from that kind of happening, because such kind of activities usually spike up the stock market, whether
Yeah.
good or bad. There's a saying that goes, there's no bad public, there's no bad publicity happening, and it's bad in terms of the country in Venezuela, because right now they don't have a president. But it's much more of like political. But also, even though it's political, it trickles down to the stocks, because there's a certain, and if you've seen, is the biggest oil. It has the biggest oil reserves, and with that such amount of money or value being tapped into by US, a lot of stocks in US are actually going up, because right now there's more money coming into the US economy. So if you get really understand what stocks are involved by the activities of an economy. So with such kind of happenings, the economy in US usually gains a lot, you know. So when they gain a lot of capital is coming into the economy in US. So also other companies or other stocks will be gaining. So it's much more of like it trickles down to other stocks, and it makes them become a little bit volatile. So we're expecting a really big bull run in 2026, and yeah, get ready to earn big. All I can say is just get ready to earn money. 2026 is all going to
Okay.
be about upward trajectory.
All right. Okay.
Yeah.
So because we do not have like a lot of attendees, I can see Sophia and Roy. Could you guys please unmute yourselves and ask our guest any question you may have? I'm gonna give you guys that opportunity because we don't have a lot of people. I guess people had trouble signing in, but we're gonna have this webinar on our YouTube channel, and I'm sure I'm gonna link maybe you can mention your social media handles in case anyone has a question or a sorry guys, we're back. My internet had tripped. So yeah, Koome, you can tell us which social media
Uh-huh.
handle people can find you in case they have a follow-up question. I'm sure this webinar has been informative but very short because we only had like 40 minutes on the clock. So how can people find you? Or can you give us like a phone number or a business number or yeah.
So if you want to find me, you can actually get me through Instagram. I'm also on X, the former platform of Twitter, and I go by at KHOOMME. That is at Koome.
Mhm.
Also, if you want to reach me through my mobile number, that is my business number. It's 007 plus 254 7 168 797 84. Yeah.
All right. You need to text me on WhatsApp and I'm gonna link them on the show notes of this webinar.
Okay. Okay.
Sophia, has Sophia dropped? Let me see. Alice and Roy, do you have questions for our guest experts? If you do, please unmute yourself and ask any questions you may have. I can see we have also Nevin and Sophia. So do you guys have any questions? So like maybe you can also tell us what is a bull run and what is a bear market? That is a question from one of
Is,
community members.
is that
Um,
is
yeah.
that question towards me?
Yeah, of course. I mean, you did mention
So
we're in a bull run. Kimeni Samuel, if you have a question for Koome, you can unmute yourself. We're handling the Q&A right now. Yeah. Mm-hmm.
so a bull run is when we have the markets having a lot of having a expanding. Let me say expanding,
Mm-hmm.
or the market having a lot of gains from the previous prices. Uh, in terms of layman's language, you can find that this is when the market has a lot of returns. You can find you bought last year on 2025, you bought a stock at 25 shillings, and right now it's at 30 shillings. That gain is what we call a bull run. And then in terms of a bear market is when there's loss of value in the stock market. So you've bought a stock at 25 shillings. The way our parents, I think this is a story that we had in Safaricom. People bought Safaricom when it was at its all-time high at around 44 shillings. And then it went down until around 15 shillings. So from around 2019, they were experiencing a bull run, and then from 2019 until right now, Safaricom is still at a bear market, but right now we are gaining. It's gaining back up. So there's a lot of people who bought it at that price, and then it went down, but it's gaining. Through a number of years, it's gaining. So that's the difference between the bull market and the bear market.
Understood. Well explained. So we've had about 10 people from the beginning of the webinar. So Sophia, Roy, Alice, Nevin, Samuel has just joined us. Myself, Koome as well, and a few others who probably have dropped off before the second session. Roy has raised a hand. Could you unmute yourself, Roy?
Yes,
Unmute
yes, yes.
yourself. Yeah, what's your question?
Good evening, everyone. I hope I'm audible.
Yeah,
Yeah.
you are.
So that was a great conversation from you guys. And my question is, if you're starting out, what brokers would you recommend to start with?
Let me take that question. So
So
that would be the sponsored broker for this particular webinar, and that is Do Prime Africa. Everything global stocks. We're working on getting the Capital Markets Authority license this quarter. Actually, we've already paid for the non-dealing desk license, which is 30 million Kenya shillings. We're required to have an office. We have employees. So we're like in the final stages. We're like 90% done with the application. In terms of local stocks, Koome, would you recommend the Nairobi Securities Exchange?
yeah. I'll actually recommend the NSC right now because it is really gaining a lot. So in terms of brokers, he also asked in terms of local brokers. There's Stalin Capital, there's Old Mutual, there is also Suntra, there's AIB XYS Africa, there's also ABC, a couple of them. So it depends with what you want, but I'll send you to Stalin Capital, or if you want, go to Old Mutual.
Or tier one banks like Equity and stuff?
Yeah.
All right. Roy, have we answered your question?
Yes, yes. So, I've gotten the brokers that I can get locally. So you said I've forgotten the name of the sponsor because I also
Oh,
wanted
okay.
to
I'm
get
gonna
into the
send,
global market.
it's called Do Prime Africa under Do Group. We have regulators. We have Taiwan regulators in Cyprus. We're regulated by CySEC. In the United States, we're regulated by the SEC. In the UK, we have FCA. In South Africa, we have Financial Services Authority. In Australia, in Indonesia, Asia, Hong Kong, and we're like penetrating the Kenyan and East African market. So that's Do Prime Africa. I'm gonna send a link where you can actually go and open a live trading account. The onboarding is very easy. You just upload your ID and a proof of address and that you're of 18 years of age. And then you fund, we have three types of accounts. We have a cent account, a cent account, an STP account, straight through processing, and an ECN account. They have different trading capital requirements, but I think with $100, you're good to start. So become an owner in the stocks market, not just a consumer. That's like the takeaway. So what is your takeaway, Koome, in terms of stocks?
So my takeaway in terms of stocks is stocks will help you hedge inflation, and it will help you in your journey of creating generational wealth. So take time to understand stocks, take time to understand how you can get involved into it, because you find that it is a really great passive income, or also an active income for people like us. And it will help you really a lot in terms of when you need something that will make your money grow. So make your money work for you, don't work for the money.
All right. As a conclusion, I'd like to highlight that as Sylvia's Traders Lounge, we have a webinar every Tuesday on a weekly basis. We also have roundtable talks on X Spaces with other traders, other Kenyan traders. If you wish to plug into our trading community, you can write down our WhatsApp number. It's +254 726 662 409. Or you can just reach us on our socials at Sylvia's Traders Lounge, at STL everywhere, YouTube, LinkedIn, IG, X, and Facebook, YouTube as well. We're yet to go on TikTok for the younger generation. So before we close, is there any question that is pending? We have like 4 minutes on the clock. Alice, Samuel, Naveen, do you have any questions for our guest speaker? Okay, I've seen Naveen has actually linked your social media X handle. Okay, I guess that's a person from your community. Yeah, I'm gonna link all that on the
Yeah.
show notes, guys. Don't worry about that. Okay, if there's no other question, guys, I'd like to thank all of you. I think I have mentioned you all. Please join our trading community. There's an expo coming up in March at Tarit Center. On the 10th and the 11th, we're bringing in guys from different parts of the world. It's gonna be like the first ever Fast Africa Expo in Nairobi. We've seen other expos in Dubai, in South Africa, in Lagos, but this is the first of its kind in Nairobi. And I'm gonna be speaking. You can come and listen to other panelists, get some knowledge on trading, not just Forex, everything, like everything. That would be really nice if you put it on your calendar. So with that, guys, I'd like to say a very big thank you to Koome. We'd love to host you again on our webinar. Next time, what we can do, you can teach us like a live trading session of how you actually conduct your analysis and trade in stocks.
Right.
We would love to know your trading approach and everything. So with that, guys, it's a wrap. Have a good night. This webinar is gonna be up on our YouTube channel by end of day tomorrow, so you can share with your attendees. So thank you all. Lots of love. May 2026 be a very good year for you guys, and we hope that you add stocks to your portfolio as well as indices, as well as Koome has educated us. So cheers, guys. Bye. See ya.
Bye. Thank you.
All right.